And there we go. Microphone check, mama microphone checker, mama microphone check, mama microphone checker. Gotta tell me this microphone's working, people. I hope you hear it. All right, I'm coming to you on a beautiful, most epic, amazing day. I'm going to be here all day as long as I can stay in this seat with you, watching what's going on. We are going to talk about this day for a long time in history because this is the day that AMC sets its record date for its preferred equity ape share being exported. And I cannot understand anyone who is not fired up to see this, because essentially this is a representation of everything we've been talking about for like a year and a half now. Synthetic shares, naked shorts, failure to deliver. Everything that is our DD comes down to whether or not we think we could prove these synthetic shares with a dividend payout. And this preferred equity sense is a customized, modernized way to get it done. So hold on to your butts. We got a lot to watch. So we're going to go over the actual offering, every single thing that AMC detailed out about the offering. So make sure everybody's clear about that today. But first things first, we're about 18 minutes into the market. So let's get to the charts first and foremost. Now, the main markets, SPY, QQQ, and DIA, were started off down in the morning. They're on their way up, but they're still down overall. So we've got the SPY at 30 basis points down. We have the NASDAQ right about flat with 6 basis points the negative at this moment, and the Dow Jones Industrial Average at 11% down. Now, of course, I follow the ETFs instead of the actual indexes. Reason being is because the ETFs price themselves better in pre-market and after hours than the indexes themselves, if you want to really follow them and be doing any charting in the non-market hours. I find it to be a lot better to stick with an ETF for that reason. So we've got our squeeze babies, the OGs of the squeeze baby planet. It's got AMC, GME, and BBBY isn't really, it really should be BlackBerry on here for the original squeeze, but BlackBerry faded off a while ago. But we can see that BBBY in pre-market went as high as $15.61. It's now sitting right around $14, just under, as of the current market open, which is just about 20 minutes into the market. And AMC is down 3.36%. GME 3.63%, $39.27. AMC at $23.59. And we are going to see what's going to happen with these dividends. All right, so let's take a round robin around the market, see what we got going on. All right, so let's see. We're just going to stick to the top right for our changes here as we analyze some of the other movers and shakers that have been interesting here. Actually, let's bring up some watch lists. Let's go about it like this from now on. All right, so we're going to take a look at our banking sector first off here. Looks like everything is pulling back on that, which is what I was expecting. It's finance and banking has had quite a run along with the rest of the overall market. So we're seeing a pullback. You can see here this FAS is a finance bear 3X. So when that's up, generally speaking, finance is down. No more holding on. Long-term stocks. What do we have here? I don't know if this list really should have things like Snap on the long term, but they're all essentially in the same conversation, generally speaking. So okay, so Facebook 2% up, Tesla 1.5% up, Coca-Cola up with Costco, Pepsi up, but then we have Walmart, Apple, Google's, both of them, Microsoft down as much as almost 50 basis points, Twitter down, Target, Berkshire is even down, but all of them on the negative side, just within a 1%. So the bigger movers on the long-term stocks that I have here, and we'll be adding to this list very soon, is the Tesla, Facebook, and Snap. I want to take a look at commodities right now. This is another watch list that I'm expanding out from another brokerage, but just see what I have for now. Do we have any big movers? Yeah. Oil is taking a big pull back. Let's see. So that means that our ProShares Ultra Short Oil is firing off at 7%. Looks like Natty Gas is pulling back. So this would be very bullish for the market as a whole, I would say. Dollar index is pretty flat, and a lot of commodities are pulling back, pretty heavy. That's bullish for the day, boys and girls. Let's take a look here at some of our indices versus their inverse. And these are just ETFs that cover certain indices like the SPY, NASDAQ, Dow Jones, Russell 2000, as well as their inverses. And some of them are a little bit more leveraged than others. Just like to try to keep an average of how everything is moving within lines of each other. And that's a good way to understand, where there might be a little bit extra gain to be had, even though things are being heavily. These lists have got to grow out. I'm pulling everything from my Fidelity list, so I'd like to have about 100 listed off here. Just want to see if there's anything sticking out. So in this little list, it's a BBBY, but this list doesn't really count quite yet. Give me a little time to grow that out. All right, now we're looking at our decarbonization plays. There's a lot of money coming into these. And we see EcoWave up 5%, whereas on vice versa, Solid Power is down, SLDP down 6.4%. Okay, China stocks, how are they doing today? Everything pulling back, generally speaking. Crypto mining, how are we doing? Okay, Hive and Hut had big runs yesterday. So this is a general retracement after quite a bullish day yesterday. Fertilizer, Dividend, all right, so good. Covered all the indices real quick. Let's get back to the stocks. And of course, what's most important on the topic is AMC. And I just think everyone should understand that basically today is the day if you want to ever get involved in this crazy thing called the ape share, then this is going to be your time to do so. Oh, bear with me here. Let me bring this on up. I bring it on up. Okay, so as you can see here, today being the wonderful August 15th at, what is that, 9:54 a.m. Eastern Standard Time, you can see it's par valued out at 1 cent per share, by the outstanding of close on business on August 15th, 2022. The special dividend is expected to be paid at the close of business on August 19th. It won't be settled. You'll get it then, but you cannot trade it or do anything with it on the 19th. All right. The company has applied to list its AMC preferred units on the New York Stock Exchange under the symbol APE starting August 22nd, and each AMC preferred equity unit is designed to have the same economic and voting rights as one share of common stock. So that's what sounds like a split. Now people are talking about dilution or whether they should put this off, and it was nice to see that Lou and Trey had a fairly civil debate about this, and Lou thinks that they should have paused this till fourth quarter to give us an opportunity to squeeze. And of course, I can't understand why, because there's no guarantee that whatever he thinks would happen with that squeeze would happen within that period of time anyway. So if you were to delay it to Q4, and in fact, you'd just be putting us into a total other recessionary environment, different quantitative tightening with the Fed. And with stricter recession down pressures on AMC, they could start seeing real earnings issues, and you might not want to be in that position in Q4. So I say it's now or never, people. It's now or never. Like, I don't understand why everyone's not psyched about this. I mean, I understand like it's dilution, right? Every time we've had dilution, we've had a little pump up. It's rode that pump for a little while, and then we pulled back over time until the next point. Now, the whole concept of this entire thing, policing the shorts, figuring out synthetic shares, year and a half of DD, post after post, argument after argument. Is it AMC? Is it GME? Whoever it is it synthetic shares? Guys, it's synthetic shares across the entire market, right? And right now, like, we literally have the best opportunity we've ever had. All right. The NFT aspect wasn't enough to police the shares. This is it's listed on the New York Stock Exchange. It is a split off of AMC. It's designed to have the same economic and voting rights as one common share. The AMC preferred units can convert into common stock, but only if the company proposes and investors vote to approve an increase in the number of authorized shares of the common stock in an amount at least sufficient to permit the conversion of the AMC preferred equity units into common shares through a common stock amendment. This is something we would all be able to vote on. All right. So it can't happen unless we all vote on it. All right. Now, regarding the dividend, Adam Aron, AMC chairman and CEO, commented, "Today we are rewarding and recognizing our passionate and supportive shareholders, both to our shareholders in the U.S. and internationally. With a dividend of AMC preferred equity units that will trade on the New York Stock Exchange under the ticker symbol APE, shareholders will receive one AMC preferred equity unit for each company issued share of AMC common stock that they own. This means that our base of 516,820,595 shares outstanding will be issuing a dividend of 562,820,595 AMC preferred equity units." Boom, shakalak. Like, why are you not thrilled about this? Okay, so every other time they've ever diluted, we've been pissed about it. They had to do it anyway because they have to make their books. They got to pay their debts, and this makes it easier for them to apply for other loans if they have cash backing them, right? And now they decided to, and what they inevitably would have to do is dilute, but they diluted with us, the shareholders. I've never seen that. I mean, I'm guessing it's definitely happened. It's never happened with another ticker symbol. That ticker symbol was never called APE, and it was not listed on the New York Stock Exchange right along with this one. So they're diluting with us, right? Theoretically with us, okay? So why wouldn't you be thrilled about that? You know, if you like AMC or you want to, you know, I'm throwing some money that I don't care to lose at this, you know, right now, just because I want to be a part of the show. Like, I want to see what goes down with this, honestly. I think it's an epic and historic moment, and I think this is what we've all been talking about. So if you wanted to delay it, maybe you don't believe in your own thesis, but the whole concept is that we were already diluted by synthetic shares, naked short selling, the options chain and derivatives, naked options, right, and failures to deliver. And then algorithms were cycling these failure to delivers in certain ways so they always could keep up with it. And so that means that we have always been trading under an imaginary dilution that has been involved with what I just explained, along with dark pool trading, spoofing the order books, and putting all the buys into the dark pool and all the sells onto the lit market. You know, we've been seeing dilution trade. If our theory is correct, then AMC has been diluted this whole time with these synthetic shares and everything like that. So why are we talking about dilution if the dilution is actually meant to police what we have theorized as much higher dilution? I've heard low estimates of 2 billion float of synthetic shares out there. I've heard median estimates of 4.6 to 5.6 billion. I've heard 12 billion, 100 billion, you know, everyone just start throwing out billion. Yo, I think it's a trillion, son. I think it's a trillion. It's a trillion, man. I'm telling you, look at this spreadsheet. Right? But like, it's a lot. It's a lot of shares, you know? And so we've been trading under a diluted environment the entire time, obviously. So if in fact there was already more than 1 billion shares of AMC out there in synthetic float, then bringing in this ape, splitting it up, only ape shares are going to be delivered to each one of these shares. So any synthetic shares aren't going to have that ape. So how are those brokers going to be responsible to pay out an ape token that they don't get? This is the whole theory. This is the make or break time. This is us policing the market. We're going to find the synthetic shares. It's a make or break moment. I think it's an all or nothing play because we see the recession coming up. I'm sure Adam Aron sees the recession coming up, and he's like, hey, our earnings are going to start getting lower. This could start leading to some, let's do this now. Let's do this how, you know, this is the time to strike, right? So we've already established that we're already trading in a diluted environment. This is meant to police that diluted environment. There's absolutely nothing to say that within the next 2 quarters we're somehow going to see this squeeze play happen under natural conditions, especially during a bear market when this was absolutely a bull market play based on a bull market algorithm. So I don't see there's anything to lose. For every single AMC shareholder out there, why wouldn't you want to ride the wave? Why wouldn't this be the whole reason to get in there? Or if you don't like it, sell out. Get out of it now. I was going to pop back over to the charts. Before I do, let's make sure there isn't anything else. Okay. So Adam Aaron's point in this whole thing is that every time they'd offered shares or had a dilution, that the stock has gone up. Oh yeah, what's good? What's good? Oh yeah, what's good? Hell yeah, I'm hoping I got my mic rocking right now, right? Microphone check, mama microphone check, mama microphone check, mama microphone check. What's up, beautiful people? Hell yeah, glad I'm finally kicking that. That was annoying. What's up, Doctor? Oscar's in the house. Hell yeah, homie, you on the road right now? Well, tell me if you want any kind of music to play in the background while we're going over this. Have you guys been hearing everything so far, talking about this ape share and today being the record date? It's basically if you own it by today. Here, we'll read a little bit further into this. You can see the record date for AMC Preferred Equity Unit Dividend is the close of business on August 15th, 2022. However, the AMC Preferred Equity Unit Dividend is expected to be paid at the close of the 19th of August, 2022. The New York Stock Exchange has established that August 22nd, 2022 as the ex-dividend date. So that's essentially a T+2 settlement. So this is a 2-stage dividend process because there's going to be another preferred equity unit created rather than a dividend would be like a cash payout. If an investor sells our common stock before the ex-dividend date of August 22nd, that investor will not be entitled to the APE share unit dividend that are sold. Alternatively, if investors buy our common stock before the ex-dividend date of August 22nd, they will be entitled to receive the AMC preferred equity dividend unit shares as purchase. Investors who trade during this period should consult with their broker. Okay, so that was something that was brought up earlier as kind of like a gray area. And this is why I'm saying skip the gray, because every broker is going to settle these shares differently. And if this is really about policing the entire thing, let's get your shares in, get them settled. That's today. That's August 15th. By end of business today, Eastern Standard Time, 4 o'clock. If you want to own one, own one. If you don't, just sit back and watch. You don't need to own one to be able to watch what's going to happen with this. All right, so it's working. Yes, sir. Yep, Oscar's on the road, man. All right, attaboy. Keep on trucking our stuff, man. Our supply chain is we need you, buddy. We need you. All right, forward-looking statements. There's a little bit blah, 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 a little yada, yada. A little too long, didn't read, don't even need to bother, but you are cautioned not to place undue reliance on these forward-looking statements, which speak only as of the date they are made. Forward-looking statements should not be read as a guarantee of your future performance or results and will not necessarily be accurate indications of the times at or by which such performance I hate reading legalese results will be achieved. All right, so that's what we got. Let's pop back on the charts. Let's see what's going on with the markets. All right, we've seen the S&P fire up since market open. We've had a couple drawbacks here and there, but we've hit a level of 427.36, which is where we started pulling back for the first time of the day. That happened right at the 10 o'clock mark. So right at 30 minutes in, now we're 6 minutes in. We're on the 1 minute chart right here. AMC's pulling down. It's at 6.8% down at $22.78. GME, it's still pulling back. Looks like it's had a recent ding ding candle, and BBY's managed to hold in its breath. That's all right. The Q's up in positive territory. Dow hit positive territory. SPY is looking to threaten back to positive territory. And I'm going to bring us into the 15-second chart just so we can try to identify some daily levels. We're going to stick to the SPY, which is top left. And let's give him my drawing tools, man. All right, well, we're not going to draw some tools up. We are going to establish. All right, so we got this 426.33 is a strong level. It's faced resistance before. We've broken through that resistance. We've gone up to 427.30, and then we've pulled back all the way to 46.30 and then bounced off. Now, essentially what we're doing is bouncing off the outer weight, the outer band of VWAP, the upper band of VWAP, and the 15-second moving average. So I wouldn't say that's a particularly strong spot where we're starting to consolidate right in there. And that gives us a rough range of about 425.08 all the way up to 427. Let's call it 30 bips as our range that we've established for the day. And we have 425.95, 426.50 as some kind of weaker support and resistance lines, 425.64. All right. Now, let's see what kind of volume we have going on in general. Doesn't feel like a lot. Let's do a little zoom out here. Pulling back to the one-day chart, and we have seen volume pulling back slowly but surely. Hey, who the hell is Shirley? Slowly but surely in these days. But AMC volume is up, relatively speaking. GME is not. That is tanking out. So it'd be BBBY and AMC showing the real volume profiles. The bigger markets really aren't showing large volume swings. And see, that's one of the things that you know that you're in a bear market rally rather than a recovery after a bottom, is because you want to analyze volume, right? So if it's a bear market rally, the volume is going to stay the same or be even reducing a little bit in the markets overall. Just look at overall market volume as a whole. And if you've hit your bottom and you're on your way for your permanent bull market rally, another 10 years to the upcycle, the volume is going to be there as well. And we don't see that yet, right? So what we have is this thing where basically at the end of March, we were at 460 on the SPY. All right, we came all the way down to the end of June here, mid-June, and that was the bottom of our market. That had got us as low as 366, 364s, 362. That is a huge bear market. Now, this rally since had seen basically a bear market rally, pullback, rally, pullback, rally, pullback. Big old rally to where we are now today, which is just topping off at the 200-day moving average. We have been trading on the SPY under the 200-day moving average since 420. Nice. And you can see right across the top three here, these are our big indexes. SPY, middle is NASDAQ, left is Dow Jones. And you can see they are all just about to broach their 200-day moving average. So this is huge. This is huge. Now, my thesis is leaning towards this 200-day moving average will serve as the ultimate resistance line if these markets can get there. Like the Dow is already there. The NASDAQ has quite a bit more to go. And the SPY is tippity-tip tapping on it right now. Let's see. You can see in a little bit closer here. I mean, basically, oops. The 200-day moving average is at 429.08 over the past 200 days of the SPY, right? So, doesn't that tell you a lot? That doesn't tell you a lot about how that bull market was. Man. All right. Very good. So, you can see we're at the top of this range now. So, if you're bearish, this would be a time where your pricing alerts would probably be firing off. You know, anywhere between this 426 to the 429 area. I suspect we'll be in this range today. Like, I suspect this will be the range. I don't suspect that we'll pull back. Let's get back into like a 5-minute chart. The 5-minute chart's useless when we've got 6 on the screen. We might as well get a little bit more data. All right, let's check and see if anyone's got any questions. I'm on the road, but not my own truck. I'm on a loaner truck. Keeps breaking down. Oh, that's a bummer. Yeah, you told me you had to do the loaner. You got to do what you got to do to survive. I hear that. But if it keeps breaking down, it's like, all right, thanks a lot for that loan. Man, it's not easy for people out there these days. Everybody's looking for a little bit of a break. And all they're getting is a break in the back. You know, and unfortunately, a lot of this is by design, unfortunately. And, you know, ask me about it sometime if you're curious about it. But let's stick to the goods and the natures of today. Now, AMC has had its first bounce off of support at 422.65. It's the first time we've actually really seen it taking a break. We've seen a lot of volume pile in right before that down, and then it really kind of like hit a little surface there. And so we're right around 423, $23 right now on AMC. GME's got a very similar chart. What a surprise. Actually, I see BBY having a lot more volatility in action, it being the runner of all three of them as of so far right now. I got to get all my watch lists in check. I got to pull all of them over from the other brokerage. I think I'm going to do that tonight. So let's go over to some market screeners right now and take a look at what we got for top gainers and losers on the day right now. Let's just kind of see if there's anything with a high market cap that sticks out to us. That's a good question, Ape Logic. How do you think AMC will play out this week prior to Ape as well as after its release? Well, I think it's the right thing to say is I really don't know. It's I know what we've seen happen before. I've never witnessed this particular type of dividend on this particular type of stock. Anytime you might have ever seen a dividend being paid out like this in a preferred equity, it would be on a large blue cap value, like dusty old sleeper type of company. Why isn't this loaded? There we go. All right, there we go. And so AMC trades a lot differently. Here's what I think. I think we've all been, quote unquote, holding on to our popcorn to see if these synthetic shares are real. So this is the money where your mouth is moment, where we discover if our DD for the past year and a half had any teeth at all. This is when we find out. This is it. This is like, if we are ever going to be able to police synthetic shares without help from the SEC, which we know isn't going to happen, it's going to be now. It's going to be through this particular offering. So how this plays out, I don't know. I know what our DD for the past year and a half says that it should be. It should be that this offering should shake out synthetic shares. They should shake out today. They should just be shaken out by end of business day today. They should be closing their positions. But they do have some wiggle room here because not only do they have this 6, it's basically a T+5 or T+6 that we've got on this particular date. So that gives them all that many days that they can wiggle and jiggle before the actual shares really need to be in the account. You know how we have options that expire on a Friday, but we don't know. We know the market makers don't actually have to get those shares into the client's account until T+2 later if people, exercise their options. So that's usually Wednesday morning. And that's why you can see big, gamma pops on a Wednesday that no one was expecting. So, I mean, this is supposed to be it. This is supposed to be it. And if it is it, then we should be policing all of those shares. They should be short covering, or they should get busted and they should have to pay out. There should be a big mess of shares that don't belong or shouldn't exist, and they should all be equally accounted for under a new coin called the APE ticker symbol that is listed on the New York Stock Exchange on August 22nd. And that should be how it is. If it's not that, then we were wrong. And that's all right. That's, there are a lot of people that were involved in expecting this to happen this way. It's not necessarily that we're even necessarily wrong as much as that there's not going to really ever be any way that we can police these synthetic shares. I mean, we're going to have to kind of bow down to the algorithms and basically say, all right, you motherfuckers are too fast. You motherfuckers are too fast. You cycle the shares too quick. We don't know where you put those, where you hid these. I don't know if they're in options that you're going to let expire in 2020, 4 on some leaps or some shit. I don't know. But this is the time. I think the entire group, whoever you are, whatever tribe you're in right now, I think this would be the time where you'd say, all right, I'm going to go grab another one of them. I'm going to grab one of them today and we're going to see. Can we police some synthetic shares? Is the theory right? Because AA gave us everything we were asking for. And he named it exactly what we would want. He named it the APE ticker. AMC Preferred Equity. So, I don't know. Get your APE hats on. Forget about logic theory. Forget about the levels. Forget about your TA. Forget about your fundamentals. There was, Trey and Lou were having a fairly civil debate about whether or not they should delay this. And, Trey stuck to his normal position. He's like, this is something that would be better for the long-term, equity of the company. Oh, I didn't even change this text. Let's just get that out for now. Let's fix this. It's not easy doing your own production, right? So AMC Record Dividend date is today. Get your APE. Get your APE right here, right here, right here. Get your APE right here, right here, right here. I mean, I wouldn't know why you wouldn't want to have one just to hang it on your dresser just to remember the story. I mean, this is history right here. I mean, after this, the people who, a lot of people's DD is going to be tested right now. Let's see where the dust settles after the 22nd. Exactly, Ape Logic. That's what I'm saying. Let's see how this thing plays out. I'm not putting anything in this in order to make or not make money. I just want to play. I just want to play this game. And I want to see what happens with it. One of the reasons I never really built this channel on talking about AMC was because I didn't think this was a proper fundamental place to build off and financial education channel, which is what I want to do. I want to educate people on how to trade properly. I want to teach them about, not just diversification, but also centralization of your portfolio, understanding what how to trade by the minute, how to trade by the hour, how to trade by the year, how to trade by the month, educating everybody on how these things work, talking about it, working together through levels every day. That's what I want to do, so I never thought it was the right thing to talk about AMC. especially because I had been a financial advisor before, and who would ever find themselves talking to clients about like this AMC craziness, right? But I loved it. I loved to see what happened in the early days with the community. People really come together and discovering a lot about a stock market that I had seen broken and working like that my whole life. And it was something that you were never allowed. We got SPY pulling back, QQQs pulling back as well, trying to look for any like inverse correlations between the squeeze plays and how the market is playing. I'm not seeing anything, not really seeing the markets care too much yet. But anyways, getting back to the story, it's like this was an amazing time for me because I always saw what was broken in the markets for the past 15, 17 years, ever since I left finance, right? And so to see a bunch of, goofballs and self-proclaimed retards to come together and actually discover a lot about what's wrong with this market, I was amazed by it. I supported it. And I actually made a lot of money in 2021 off of AMC. The thing that I had to do was I had to pull back in November because I saw the bear market coming, and I felt like the squeeze play was a bull market play. And once we lost our bull market, I lost kind of, my interest in sticking so much to it. I think at most of the time through 2021, I was at times 100% in AMC, and I could never, ever, ever give anybody advice to ever do anything like that. That's some apish type of stuff. I was taking on lots of risk, and I was okay with that. I just didn't want anyone else to feel that influence here. Here in this situation today, talking about this ex-dividend, like we're not talking about that. We're talking about if we were right or wrong and whether or not we're going to see this thing play out right in front of us over the next week. I can't wait. I'm thrilled. All right, beautiful humans. Keep an eye on the charts for me right now. I got to go grab some water. All right. Did we lose our tunage? Oh, let's get some tunes back on. Oh yeah. All right. So we found a new level here on the SPY, right around 425.54. I was actually calling us 425.60-ish right now, which we were calling out as a possible level a little bit earlier. It did hit that and proved to be a level right around 425.56 on the SPY. All right, we're currently almost an hour into trading. We have 5 minutes left until it's been our first hour of trading for the day. And we have some levels established. We had essentially a big run up in the morning until 10 o'clock. And then we've had a retracement of about 50% down. And it's your typical morning. Like I said earlier, volume is not too crazy. Let me know if anyone has a particular ticker that they want me to look at. So if you guys are wondering where I'm getting this music from, it's the staff picks from Epidemic Sound, which is, if you've never heard of it, they authorize copyright-free music. If you pay a subscription, you get to use copyrighted music in your broadcasts. So I didn't make this playlist. I'll be developing some good ones for us later, but I just thought I would just wing it, whatever they got. I've never really been that disappointed with the staff picks, really. Puedo esperarte. I can wait for you. When you dance slowly. I love Spanglish. All right, GME just had a little bit mini boom boom candle and then it pulled back. We got BBYs hitting us at 9%, just under 8.88% right now. AMC's having a little bit of a surge back from it. We're at 23.47 right now, 48, 47, 46, 47, 48. And our dogs are out the gate, going a little bit slowly here, 3.97% down on the AMC and 3.29% down on GME. BBY being the stunner for the day. And I think it wouldn't be so bad right now for us to go over a little bit of news, switch up the topics for a little bit, and actually, all right, so I'm not going to do this too often where I play another YouTuber's channel. We're mostly going to cover mainstream media, but recently I've been getting into the Maverick of Wall Street, and I haven't caught his video yet. I think we should all just watch it together right here. I'm not going to watch the whole way through, but I do think he has some important things for us to talk about here. I'll bring him in. He'll mention them, and I'll pause here and there to discuss my thoughts on it. So let's switch over from the charts over to our good old buddy Mav. And he claims this is his most important video that he's ever done. Oh, okay. All right, so Oscar, I tell you what, once we go through this one right here, I will go over TGIFF and space for you, no doubt. The music will probably be real low. Maybe it's more for me than it is for you, but I don't want to blow up anybody's speakers over there. I just want to make sure we got a little something in the background. So dead air ain't just dead air. Okay, so not sure if you guys heard about this guy. I think he's dope. He's kind of a little bit more from my generation, a little bit on the older scale, kind of an OG kind of head. And he says he's got some really important things to discuss. I think I'll probably agree with him a lot here, but I'll chime in with my thoughts as we go along. I'll probably put about 5-10 minutes into this. All right, let's check it. All right. All right, so check it out. This is why I like a dude like this, because it's so important to actually know how this modeling and TA really is meant to be used. He is 100% accurate on what he just broke down. This is why I like this guy, right? If you want to be measuring Fibonacci's and retracements on your TA, you want to be doing it with a time period that has begun and ended in terms of what you're trying to analyze. And he identifies it perfectly. The only thing that you can actually really do is go back to the last bottom, then the last peak, and use that as a retracement and see where we actually are. And he's about to break it down for you right now, where we barely he's about to break that, I'm sure, down. But this is so important. You can use these graphs and these drawings any way to convince yourself of any sort of thing on the chart, but you need to understand what you're doing and how to use it. So that was a great point. All right, let's get back to rocking and rolling with the math. Right. Ooh. Oh, you guys can check that out. Check that out. See back on this chart right here, right at that little top peak back in 2000, the beginning of this chart. See this little spot? That's when I started in finance. And like for the next year, what was it? 2 years. 2 years, it just went. I was in customer service for the initial 6 months of that, and I just had people on the phone go, where the fuck is my motherfucking money? Where's my motherfucking money, kid? All right, you tell me where my money is. I'm like, thank you for calling, but I don't know where your money is, sir. I'll go check it out. It's actually why I learned so much about bear markets and how to handle bear markets in general was because of the dot-com burst. I started in March of 2000, like mid through March. Like I think I hit the floor like the day the market was like, and we didn't have like a super tank like we did in '08. And even the tank down that we've had this past, look how sharp these tank downs are here. See, like those are crashes, right? This isn't quite a crash, but that's a big down, right? What we had was just this slippery slope for 2 years. Painstakingly slowed down. Oh, it was painful. All right. So, all right, back to this right here. Ape Logic, I'll get to your question after this. Yeah, that's pretty true. I mean, wait a second. Okay, just to be clear, I have a poem I wrote at the end of 2002 where I called 2003 as a wonderful time to invest to make it back. And so I wouldn't say that, I would say that the general retail sentiment was very bearish for the next year. But if you were into financial advice, advising, or understood the economics of it, at the end of 2002, after 2 years down, we knew the Fed policy was shifting. We knew what they were going to start doing. So, like, we were like, okay, '03 is going to be a relief rally for us. And it's true that not until the end of '03 did they really, define. Where is this on this chat? I can't find it here, but it's true that it wasn't like exactly known for another year later, but people knew, and just want to clarify. No, exactly. Oh, all right. So, all right. So this is when I think the conversation gets very, very subjective, right? And this is when I think the conversation kind of gets to our confirmation biases, right? When we start kind of analyzing historic data like this in order to prove which is a bear market, which is a bull market, whether we've hit a bottom or a top. I don't really like these conversations because I don't think they're really that constructive to our general trading every single day. You know, like I don't think that really helps us. And I think that helps the narrative that they're pushing, but I don't really actually think it helps us. We're here to make money. Trial by fire, bro. Yep. All right, so Ape Logic here, I noticed that, Oscar, thank you. And so Ape Logic here said, how long do you think it's this bear market will be? Michael Burry is really harping on what's to come. All right, so I tell you what, Ape Logic is asking about this data, so let's, I think that I've seen a lot of Maverick's breakdown of bear markets already before in other videos, so I'll let him do this for you so he can get a good answer to your question. I think this will essentially answer your question, and instead of like essentially based on historical senses. But Michael Burry's, I'll tell you, one of the problems with Michael Burry is always way ahead of himself. You know, he's correct, but he's always a way ahead of himself. And he gets a little bit too harped up on how things are supposed to be versus how things are at the moment that they are right now. He's always been this way. He's a little bit just like that. I don't blame him. He's right in a lot of ways, but the problem is he's way right, like way early. And there's a lot more things that are playing out now that weren't playing out in previous market cycles that we have to deal with, like the fact that there's twice as much currency out there than there ever was in any of those other cycles before. And that's globally. So we can get historical ideas of bear markets and things like that, but you're going to understand that basically I think we're kind of at the end of the road of these cycles. Because I thought the '08 crash was pretty much the last one before the last one. During that time, we saw about roughly 80% of the world's equity and assets shift into the hands of the rich and banking sector, who took over as collateral for these failed loans. They own all the deeds to everything. About 20% is what they're here to get now. The last 100% that we have left now is that remaining 20% from 1980, and on top of that, they've essentially just hyperinflated that last 20% so they can burst its bubble as well. I think that's the situation that we're in. Ooh, look at that AMC having that good spike. Do you guys see that? Look at that. Some people coming in. Maybe it's some short covering. Maybe it's some people. So we hit our bottom at 2265, and AMC is showing us some life right now, showing us a little bit life, going up to 2382. And how about that? We're at, how far are we into the market right now? We're just an hour and 11 minutes into the market right now. So we've basically rallied off the bottoms for the day so far back to roughly where we opened. And we are topping at the daily volume weighted average price upper band. We just broke through there. We're coming up on the 200-minute. We actually broke through the 200-minute moving average. We're well above the 50-minute moving average. So this is, generally speaking, when you see this break, it's a good sign. All right, so we've seen it break above our tops and our peaks, and let's see what we've got left. I think we've got ourselves a little bit of some pressure to the upside right here in a really positive way. We're seeing Bed Bath & Beyond's getting some little mini boom booms, and GME's running back with us. So all right, let's go. Let's get us back to positive territory here on the day. This is where I expect us to be. All right, so we're going to be looking to get ourselves up over $24.50 for the day. Another little mini boom boom candle. Let's zoom on in, right? Like I don't do this too often. I like to watch it at the 15-second mark is really, once you get into the 1 second, 5 seconds just starts looking like barcoding. And you can actually draw out some interesting aspects of what's happening at the 15-second chart. You can see levels start playing out. You can start getting zoomed in and see that, like right now, like BBBY is being heavily manipulated by high frequency trading. It's obvious by its very, very close to barcoding type of buys and sells as volume comes in. The other good thing about being on a 15 or 5-second chart, it actually divides up volume for you even better. So you're even getting that much more of an idea of when the volume's coming up and what kind of effect that volume had on the price. That's something I like, but I don't think you should trade at the 15-second. All right. If anything, that might help you with your in and your out once you've already figured out the thesis for your levels and for a zoomed out time frame. But it can help you, in the heat of the moment, really understand what, especially like I said, what volume's doing for you. Indicators at the 15-second chart do not help that much. They might show you levels, and you see they will show you levels. Like here on the SPY, you see it jumped, it hit the upper weight of the VWAP, upper band of the VWAP, came down to the 200 and the 50, which are just crossing over here, bounce right back up. You can see actually these indicators, even though they're zoomed up, and these are the 15-second 200, 15-second moving average. Like, what the heck does that mean? What kind of information can you get out of that? Well, algorithms and high frequency trading machines can get a lot of data out of that. And so we try our best to analyze it at the speed of sound in which they do it, but maybe it's the speed of light at this point. But we know they're in control, and we're here to ride their waves. That's why we can't really tell you what we think AMC is going to do. We know that she's looking strong right now, boys and girls. I tell you what, there's some volume coming in on her. Volume looking nice on Amy. Yeah, all right. And I'm not seeing the overall markets that heavily affected by anything going on in Squeezelandia. So that is super dope. That is super dope. All right, beautiful people. Let's see. We got the charts up there. We broke that down. We got some music. All right. So why don't you guys enjoy the 15-second chart? I'm going to take a 5-minute safety meeting here. And I'll bump up the tunes on some. And I'll be on back in 5 minutes, beautiful people. Oh, damn. I ain't leaving you with that song, though. I ain't leaving you with that song. Oh, hell no. What else we got? Let me know if this one's better, but I ain't leaving you with that fucking tune. Hell no. Super poppy, but whatever. Yeah, maybe the music kicked off. I gotta get that playlist rocking. All right, microphone check, mama, microphone check. Yeah, Oscar, I think the music playlist just needs to be longer. Keeps running out on me. All right, all right. So I don't know if Ape Logic's still here, but I do think after talking about Michael Burry for a little while, it would be good to go back over to Mav and see what he has to say about previous bear markets in order to break those down. I think he's going to give a great breakdown. Oscar here asks, how do we compete with high frequency trading? And the answer is to start by understanding. Check, check, microphone, check. And the answer is by starting to understand how they work and watching for those levels. Excuse me. And tech, we love AMC. Boom, boom. Yep. We're liking to see the AMC on a little bit of a run here. It had a pullback. Since I stepped away from my safety meeting, and it's coming on back in now. All right, we're at 24.15, right? We want to get to that 24.50 level today, and we want to break on through that. Break on through to the other side. All right, let's figure out this. I don't know if I want to waste your time with the music thing. I tell you what, I'll waste my time with the music thing, and you guys enjoy Mav's breakdown on bear markets and previous bear market cycles. Here we go. Mm-hmm. I had a feeling he would say that. Hey, Ape Logic, you were just bringing it up. Weird. Is anyone else can't hear it? Hmm. Yeah, I don't want to change the audio too much if everyone can hear it. All right. Well, Oscar, sorry if you weren't able to hear that audio. I'm not sure what's going on there. The audio levels look fine, and some other people mentioned they can hear, so I don't want to blow up their speakers just in case. So I'm going to keep the levels pretty much where they were at. Oh, nothing else? Joe and Jason, you can hear the report he's listening to? All right, so that wasn't coming through. Damn it. All right, well, let's just figure that out real quick. That's a bummer. Let me just figure it out real quick. I mean, desktop audio coming through. You, but nothing else. All right. All right. Do me a favor, guys. Help me out with this right now. We got to get this right. So you guys should be able to hear that right now. Just give me a thumbs up or a thumbs down if you can't get that audio that just came through right there. And bear with me here. We're going to bring up. There is no other audio coming through at this current moment. Nah, no report. All right, John Wong. I don't know why. Got the browser, desktop audio, video capture device. I'm rocking there. And let's just try this real quick. I won't put dubstep on, don't worry. Gotta make sure this audio comes through, because I got a couple other reports I'd like to cover. We gotta make sure we get this audio right. Now, anything? Still nothing? We'll get it. Let me turn this down so I don't blow anybody up once it does start working. All right. Thank you guys for sticking with me on this. I'll get it. It's because the audio is trying to go through another channel other than the headphones, which I need to have the headphones on so the mic doesn't overlay. So I just have to make sure I get the right audio input capture rocking. And I got to do it without blowing your ear off, which I will not do. Audio output capture. Bang. Let's do. All right. Desktop sound, desktop. You did? Hell yeah. Right now? All right, tell me if you can hear me. All right, you guys heard something. All right, so let's try that one more time. Only the same song. Is that it? Because I didn't really do anything, if that's it. Not now. All right. Not now. Desktop. All right. Let's hope this one works. No. All right. We got that baby figured out. All right. Thank you. All right. John 1, you still here? You got it too? All right. So let me make sure this is. We got no feedback. We just probably got a volume issue. All right, rock on. So let me bring this volume in line. Thank you, brother. Thanks. I'm glad we got that figured out. Now make sure if I switch. All right, rock on. Let me just get this over into all the scenes. Microphone check. All right. All right, so it should be block rocking there. All right, do you guys want to watch that again? And it was pretty awesome. I think like what he broke down for the bear market was pretty perfect and spot on. So we'll pull back the music here and let's just go again. So if you guys are still here, let's just go after this topic again here.
That took about a year or so, a double bottom, and then a move higher, and it never looked back. And here are the last two cases in 2018.
Okay, let's get right.
Fed pivot. It was a spike a year or more, and this is why we call it a baby bear market. But the legitimate bear market in the aftermath of the implosion of the dot-com bubble, as you can see, the bottom happened in 2002, and it was a gradual bottom, double bottom formation, a retest, and then years later in 2004, when we became sure that this is indeed the bear market. Another case, 2009, the great financial crisis. This was a spike bottom. There is no retest at all. The Fed injected a massive wave of liquidity to rescue the economy, and immediately the stock market reacted and moved higher and never looked back. Here's another case in 2015, 2016, the Brexit scare, a gradual process that took about a year or so, a double bottom, and then a move higher, and it never looked back. And here are the last two cases in 2018, 2019, the famous Fed pivot. It was a spike bottom, no retest at all. It happened within a few weeks, and the market was at all-time highs once again. It never looked back until 2020 when we got the crash, the virus, and as you can see, a spike bottom, no retest at all. Why? Because the Fed unleashed the biggest tsunami of liquidity in human history and cut interest rates to zero. And it took a few months before the market made all-time highs once again. We will look at what we have right now. We have a spike bottom. No retest so far. It took about a couple of months, if not less, before the market already erased half of the losses since the top. The only missing ingredient here to assume that this is indeed a spike market bottom is the fact that we don't have a Fed pivot. We're not even sure if we have peak inflation at all. So unlike previous spike bottoms, this bottom is missing a major ingredient, which is there is no pivot. Unless the Fed is bluffing and lying to us, we don't have a pivot for now. So this is a false assumption that the June bottom is indeed a bottom at all without having confirmation that the Fed is indeed pivoting. Now let's talk about bear market rallies. We go back in the dot-com bubble, SPX weekly chart for the cash index of the S&P 500. Since the top, we got major bear market rallies. Matter of fact, the first rally was around 10%. The one after that was a little over 21.5%. The one after that was around 24.5%. And the last one was also around 24.5%. Notice that as we go down, bear market rallies become even more aggressive. But here's the problem. So are the pullbacks. You see, the first pullback was around 21.5%. The second pullback was around 28%. The third pullback was around 34%. And then the last pullback was less than that at around 20%. And that's how we knew that this is indeed the bottom. All in all, the SPX, the S&P 500 lost over 50% of its value in the implosion of the dot-com bubble. What do we have today? Same chart, SPX, S&P 500, weekly chart. We got major bear market rallies. The first one was worth about 9%. The second one was worth about 13%. And the latest one is already exceeding 17.5%. So as you can see, the bear market rallies are getting more intense, more aggressive, and so are the pullbacks. Pullback number one was worth about 10.5%. Pullback number two was worth over 17.5%. And the question here is, are we going to see another pullback? And this is just yet another bear market rally. And if we do, this is going to be a major pullback that will take us down all the way to the consolidation range from September to November of 2020. And the median of that range will produce a drop from this point on if the SPX moves a little higher to my resistance that I just talked about a few minutes ago. The drop will be worth at around 21.5%. This will be the median. But this will not happen without one stock going down. If this stock doesn't go down, then the stock market will not go down. And this stock is, you guessed it, Apple. As Apple goes, so will the market. It is the most important stock in the market. It has the heaviest weighting across all major ETFs. If this name doesn't go down, the stock market is not going to go down. But if this stock goes down, the stock market will go down and form a lower low. So let's take a look at Apple, a weekly chart. We got a drop since the top early this year that is worth about 29.5%. Since then, Apple has rebounded, a major rebound that is worth about 33.5% so far. A lot of folks will look at that and say this is a major sign that the bear market is over. Otherwise, why would Apple rally by about 33.5%? So either the bear market is indeed over, or this has to be one of the biggest mistakes in stock market history. And my response...
All right, so this was the reason why I wanted to play this back. Answer to your question, yes, there is a latency delay between us, Oscar. Yeah, but this is why I wanted to make sure he does a good job of breaking down different bear markets, but he brings up what I thought was a really key point, which is that this rally really depends on Apple. And that's what he's discussing right here, and he's going to look historically at what Apple has done to us just because of the importance and the weighting of Apple in the market as a whole. And he's going to compare it to, and this, you know, pay attention to this part to stay focused on really what we're looking at going ahead and what to keep an eye on, because I think he's right, because I'm seeing weakness in the fundamentals for Apple right now. And they're very, very clear. And so much of the market is counting on this stock. So I think Mav does an excellent job right here of identifying that. So check it out.
To that is, we have seen this movie exactly the same way before. This is not our first rodeo. If we go back to 2008, similar conditions, just like we have right now. The stock of Apple crashed since the top by about 43%. And then came the Fed's pivot. And this was a legitimate pivot because in late 2007, the Fed was cutting interest rates in response to the housing crisis and the rise in unemployment. But they made a major move. Some of you might remember that. I do. In January of 2008, when the Fed made an emergency rate cut on January 30th, worth about 50 basis points. That indicated to the market that the Fed is serious about cutting rates and pivoting because the Fed since 2004 has been raising rates on autopilot, and they got the Fed interest rate from 1.25% in June 2004 all the way to 5.25%.
I remember that. I was there.
2006. Now, in response to the January 30 emergency rate cut, the stock market bounced in a big way. And as you can see from the headline from 2008, it reads, Fed's caution causes markets to recoil. What else they said back then? January 2008, the Fed cut gives stocks soft landing. Sounds familiar? And indeed, Apple rallied by about 66.5%. Everybody back then assumed that the worst is behind us and higher we go. And then what happened? Everybody became complacent. The VIX crashed. This headline from the LA Times illustrates that. The headline reads, more panic, please. Stock market fear gauge suggests a relative lack of concern that is often bearish. What do we have right now? The VIX cracking below 20. Everybody says the sky is clear, the bear market is over. This is actually a bearish sign, not a bullish one. And after rallying by over 66%, Apple crashed by about 59% from that point on. So that rally was a mere bear market rally. Another case, going back to the dot-com bubble. Apple crashed from the top by about 47%, and then it caught a major bear market rally that is worth almost 59%. And then what happened? Apple crashed again, lost about 79% of its value. And what we see right now in Apple's chart today, a major rally worth almost 33.5%. But is it going to end up being just like the bear market rallies that we got in 2008 and 2000? That depends on two things. Number one, do we have a legitimate Fed pivot? Number two, are the fundamentals in Apple improving or not? You know the answer to question number one.
Nope.
We don't have a legitimate Fed pivot right now. But what is the answer to question number two? We will look at the net income growth year over year for Apple. In the last quarterly earnings report, we found out that Apple's net income went down by over 10.5% year over year, even during the height of the virus scare in 2020.
So what started off as a short covering bear market rally led to kind of a hyperinflated bear market rally, John 1, and brought us back to these type of levels. You can get a ton of green, and there's lots of ways to make money on the ways up and down in these type of swings, and that's what we're here to focus on. But we really have a mainstream narrative that we have to cut through as well. And that's that we've already hit bottom. And if you didn't buy into the bottom that happened at the end of June, just before July, then you missed the bottom. And that's the narrative that they're proposing right now. And I think it's a super deadly one, because one of the biggest problems that retail investors have is they do the exact opposite. They buy high and sell low almost consistently and commonly for the past 100 years. That's how they tend to do it. So when the mainstream narrative puts the uncertainty that they may have missed the bottom and they can start dollar cost averaging into this right now, that's the deadly part. Like the green is great. Take advantage of the green. The problem is talking about right now, because we've seen all that green, that now we're about to see a bunch more. That's like the most deadly piece of advice you can give to somebody who doesn't know anything about the stock market, right? Because we are identifying points where you can't really run a retracement off of that last bottom that we just had at the end of June and determine that we're on the bottom right now or we're on our way back up. And a lot of people are kind of doing false TA that way. And I think that's sort of the discussion that we need to have, because historically speaking, we're in a little bit of trouble here rather than in a good moment. And it's this chart is really identifying it. You can see negative 10% is what Apple is got its net income growth as of I think that says Q2. At least that's Q3. If it's Q3, then that's a projection of negative 10%. All right. And, that's the only thing that's going to make the market look good is, and Apple's doing well, and that's his point. So let's let him finish out his point right here.
The lack of demand, Apple did not lose 10.5% in profits. The trend is going down. The bottom line for the company has already peaked, and it is trending down. Negative earnings. So does this justify Apple stock going back to all-time highs? Something everybody must think about. Because if the answer is no, and Apple goes down and it breaks its lows since the rebound rally, then guess what? The June bottom in the S&P 500 and the
And so you can see what Mav thinks about it, right? But John Wan brings up, if Apple comes with the Apple Watch with the non-invasive glucose meter, I can see Apple being an exciting company again. For now, it's just a new camera on the same old phones. Apple is dormant. That is an interesting thought. I mean, what was the company that we were looking at last year that was selling? Oh, it's on one of my watch lists, but I can't remember it right now. They've kind of gone down ever since that. Sensionic Technologies. I think they were offering something that would be similar to what you're discussing, John Wan, SENS. And they were, that would tie with the Apple Watch and be a glucose monitor and delivery system of glucose. Imagine if they did something like that. That would, yeah, you're right. But Apple doesn't feel like that type of company. Doesn't feel like the type of company that would take on something like that. That's a little too altruistic, in my opinion. They like to be proprietary, and they would have to share a lot of their technology with the companies that are doing these glucose monitors, and they wouldn't want to do that. So unless they had that tech in-house, I can't see them doing it. So to your point, I would say they're going to remain dormant in that sense, because I don't see them going that far, at least from your perspective, your point. And yeah, what else do you guys think? Shoot, I got the web browser circle in my screen. All right, sorry about that, Oscar. All right, let's see what else Mav's got to say, and then let's get back to the charts. There's some action we've been missing.
NASDAQ will open like a sinkhole, and nobody's paying attention to that. Everybody is absolutely occupied with the rally and the fear of missing out. We'll look at the divergence between Apple and the S&P 500. Apple has recently opened a major gap, outperforming the S&P 500. Usually, that gap gets closed. This is yet another sign that the rally in Apple is overdone. Everybody likes to look at these bear market rallies tick by tick. And when they see stocks rallying by 10, 20%, of course they're going to get indulged. Of course they're going to get sucked in. But those with experience, using the data and the facts, we know until we have a legitimate Fed pivot, until we see earnings improving, until we see the risk of recession gone, we don't have a bottom yet. And this is just another bear market rally that we've seen before over and over and over again. Here's the big short Michael Burry. He tweeted, NASDAQ now up 23% off its low. Congratulations. We now have the average bear market rally. And he's right. I just showed you that. Across 26 bear market rallies from 1929, 1932, and 2000, 2002, the average is 23%. After 2000, there were two 40% plus bear market rallies and one 50% plus rally before the market bottomed. And of course, the big short got a lot of hate. They're taunting him. They're making fun of him. You're missing out, bro. You're wrong. Or you're too early. Look, in the battle between the big short and the big diaper, who am I going to go with? The guy who got it right twice when everybody assumed that this is the new normal. He called it before everybody and got it right. And most importantly, bet on it and made hundreds of millions of dollars. Or am I going to trust the big diaper, the traders who showed up in 2020? They barely have 2 years worth of experience, but they think this is the new normal. They're the new captain of the ship now. Haven't we all heard this before multiple times? The answer is yes. With that, folks, this is all I got for you for now. Thank you for listening. Thank you for watching. I will talk to you again soon.
That guy, he's got an opinion, I tell you what. Thanks, Mav. All right. So what do you guys think about that? I know, John Wan, you had some thoughts about it in terms of all the green that we've seen. Guess we'll just have to see how it plays out, right? Make our trades good, set our stop losses tight. Now, while we were watching all that, catching up on that data, AMC did make a run all the way to 24.50 exactly, and then it pulled back. I knew this level was going to be strong. Let's take a look at that volume once it hit. Ooh, we had really nice volume candles during that time, a nice surge in volume. So that actually really tells me that some That was actually, rather than short covering, actually some retail piling in. And hitting that 2450 is and followed by a ding ding candle is a high frequency move to stick a level. And so that's why I knew that would happen. So now we're bouncing off our upper band of VWAP on AMC. GME has pulled back significantly more than AMC during the same amount of time, while at the same time, oh wow, Apple's on a boom boom candle right now. So that will see a spike in the Qs and the SPY, which is in the top left and the middle top. Dow Jones is just hovering. NASDAQ's flat on the day with many swing opportunities. It's a really good swing day for people trading maybe the options chain on SPY or the Qs. Might as well. I'm gonna pull off on the top left. We have Dow Jones. Yawn, boring. I'm gonna bring up UVXY for us, so we can get a little bit of VIX action on this. A little bit of VIXy. You know, we know she's wow. So the UVXY, right, is ProShares Ultra VIX Short. Is it short-term futures, right? Short-term futures, right? And the VIX is essentially the, you know, backwards inverse of the SPY's options chain. And Ultra is basically a 2x, if I'm not mistaken, rather than a 3x. Yeah. I think it'd be Ultra Pro VIX Short if it was 3x. So this would be a 2x leverage, the UVXY. I'm sure a lot of you guys know that. Just in case. Make sure everybody knows our reference points on this chart. I like looking at multiple charts. Do you? And if anyone wants me to zoom in and oh, wait. Oscar actually asked for a little TA earlier, didn't you? All right. The big bury, my choice. All right. They want the 8. Okay, Lit Shiver. I don't know anything about that. Oscar, hit me up with them tickets that you wanted to check out. No, I got them right here. TGIFF. Thank goodness it's fucking Friday. Is that what that is? Thank goodness it's fucking Friday in space. All right, let's go over them. Team 33 industrial. What do we got on this chat here? All right, so we're going to top right is going to be TGIFF, which I don't have anything loading right now on that. And then space, that's Virgin Galactic Holdings. You know, that's the Branson. Sir Branson. Okay, what are we looking at here? Wow, okay. So in the daily action, if we're going to stay zoomed in right now, then we're going to zoom out, then we're going to zoom back way in. All right, so just seeing what's happening on the action today. We started off about 704, which we're flat on for the day, just down roughly 8 cents. So not a lot of action there, but we had this crazy old spike all the way up to 732 this morning, which 32 times 4, so it's probably 5%, 4 or 5%. I don't know. I need to get my, there are my measurements. Beautiful. Let's just measure that out. So space made a move of 4.62. I was close. All right, 4.62% in the morning. It hit it right away. It hit its resistance line at 9:37, so 8 minutes into the trading day. it hit a resistance line 4.5% up, and it's just been kind of tanking out ever since. So it's a dud spike. All right, we know what space is. I'll go to TGIFF. Thank goodness it's fucking Friday. I'll go to that later. I want to check news right away on this. Nothing's coming through on Webull, but I don't really trust Webull News that much. I think this is definitely a propaganda kind of mainstream channel of news. So if we want to take deeper dives, it's enough to give us kind of a high level view and see if there's any kind of up-to-date news coming out, but I don't trust any of it. Research alert, CFRI maintains sell opinion on shares of Virgin Galactic Holdings. Well, we know what they recommend, doesn't really matter. Their financials, they're losing money, and we know what that means. Their cost of revenue is at 93. All right, their marketing and administrative expenses are right in line. Research and development costs is what's breaking their back, but that's obvious. You know, so it's an unprofitable company during a time where we just got a bear market rally. All right, so we got that. We don't need to look into the fundamentals of the company. We all kind of basically know what they're trying to do. All right, I'm going to go out to the hour and see that we were running all the way up to the 854 mark as much as a few days ago, running on probably news, probably like headline news right there. And then we dumped off on not too much news other than the fact that fundamentals are fundamentals. This one's not really standing out to me. Let's get way out of here and see what we're dealing with. Okay, so as much as the beginning of year, January 2022, we were coming into this stock right around the 13.95. Let's get it right. Let's get it right on that and right there. 14. We'll call it $14. It's lost 50% of its value, and so we're wondering if it's hit the bottom. It's not making money, and if the bulls are correct, and we've already seen the bottom, and that was the end of June, and this is nothing but our next bull market cycle, then I would say that you have a chance with the overall market influence to make some swings to the up direction, and space would be getting more bullish, right? But the problem with that thesis in general is that it doesn't go at all in line with what the Fed's doing, the quantitative tightening, our next Fed meeting. It doesn't really go in line with the overall market influences that are drying up liquidity on the markets overall. So because of that, I don't want to be involved in a speculative play like space that's losing so much money. And especially you'll notice that SpaceX just actually got some government contracts that they're competing for, and they have the potential to get the bids. I don't think everything's been decided, but they have the potential to get the bids in competition with Lockheed Martin and Raytheon. So that puts them into a highly competitive environment, and space isn't even really coming close. So with SpaceX making huge leaps forward in terms of government money and government contracts potentially coming in, I am fading this baby, but I wouldn't fade her much, right? Because what do you really have to play with? I mean, the options chain is not very liquid. Let's take a look. All right. I might have to take this back a little, what I just said there. Let me see. This is actually a lot more voluminous of a options chain than I was expecting. Which was dried up. But I mean, if you look at these IVs, they go out of control. Yeah. I don't even think I'd want to fade it. I mean, it doesn't pay a dividend either. So what would be the point? That's my assessment. What would be the point of that right now? I don't know what the point of that one would be. Okay, so let's get over to TGIFF. Thank goodness it's fucking Friday. This is a company I do not know. We're on the daily chart right now. which is nice because we're a little bit zoomed out. I'm going to check comments right now, make sure audio's block rocking, show stopping, pot stock, the earthquake, pot stock. Oh, okay, all right. TGIFF is a pot stock. All right, I was just about to find that out, brother. 1933 Brands. 1933 Industries is a Canada-based vertically integrated cannabis company. The company operates in the United States and Canada. Operating through subsidiaries, the company owns licensed medical and adult use cannabis cultivation and production assets, hemp-based cannabinoid infused products, CBD extraction services, and a specialized cannabis advisory firm supporting clients in security, intelligence, and due diligence. The company holds interest in Alternative Medicine Association, the AMA, a licensed medical and adult use cannabis cultivation and production facility that produces its own line of cannabis-based products and manufactures other third-party brands. The company's subsidiary, Spire Global Strategy, is an advisory company that supports clients across the globe in government, finance, resources, heavy industry, and the emerging legal cannabis sector. Right, so this play has a lot to do with legalize it. Are they gonna legalize it? And if they are gonna legalize it, obviously, like, Canadian companies are a lot better positioned to take advantage of the legalize it in the States, but are the states going to draw some economic boundaries that are going to prevent Canadian companies from taking advantage of the fact that they're going to legalize it? And once they do that, we'll have a whole different conversation and see what we have to play. I mean, it would be nice to see them drop that F off of it and come into the American markets and be offered on the American stock exchange. Well, what are they, before I speak about that, what are they trading on? Usually that F means it's a Canadian stock, and that might be the reason why it looks the way it does in terms of pricing. Webull might not offer my ability to buy it. No, it doesn't. Right, so I can create a buy and sell order here, yeah. So I can't trade this. Oscar, are you in Canada, Oscar? I'm surprised. I didn't think you were in Canada. But yeah, it's kind of off our lists, unless you can trade in Canada. And, given some quick, it's kind of tough for me to give you good TA on it because it's basically about legalizing it. And it's basically riding with the trend of the markets. You can see we hit the peak of the market on March 30th. TG, thank goodness it's fucking Friday, hit it right on March 31st. And it's been down ever since. It's a penny stock, Canadian traded. I don't know, unless you see some sort of arbitrage trade in there that I can't see from here. I wouldn't fuck with it. All right, AMC holding up, had a little bit of an attack there. Let's look at the volume during that attack. Yeah, look at that. We had a big boom candle down, not too big. It's not really boom, but boom on the 1 minute chart, and it was a volume spike as well. We had another one already, so it's starting to look like we might get another one down that's going to hit us to the 2365 level. Is what I'm going to say. So we might be coming in on 2365. We're at 2392 right now on AMC. Our next level down, and it looks like we have momentum in that direction towards the down right now, is probably around 2365, which is this VWAP for us. And so keep an eye on that. GME has already broken through its VWAP multiple times. It looks to be under a similar attack. Perhaps a short ladder. We have exactly how many minutes left in this market? We have 2.5 hours left in the market for trading. No. That's Eastern Standard right now. So we're 4.5 hours left in the market of trading. I'm 2 hours earlier than Eastern Standard Time personally. And all right. Thanks for, again, everybody, for sticking through on the audio earlier. I really appreciate you helping me get that sorted out. We should be pretty good now. I don't know, did I? Maybe want to keep that up. Just pump it on through. Making sure desktop is represent. Yep. Microphone check, microphone check. All right, so I want to start talking a little bit about commodities. This one, I have a long list of things to talk about that I should be getting to it. But I wanted to catch up on some news about Saudi Aramco right here, because this is going to have a lot to do with oil kind of falling off today. Now, I want to get an update on oil before we move over there. So let me bring up my commodities playlist. I usually kind of watch a lot of these. You can watch them from the futures market, which is the best place, or you can watch them from an ETF if you're thinking about making a particular investment. I just want to see how oil's doing. Yep. All right. So I would say oil's down what I would call significantly. I see real estate's up, gold is down, natural gas is down, nickel's down heavy. This feels really, really good timing. This feels like exactly what I wanted to see from the commodities before we would actually kind of see this market pullback that I'm expecting. Now, again, I've been telling everybody, and I want you to remember, I don't really expect a true market pullback for another week or two. So swing away, maybe even 3 weeks. This is your time to scalp and swing trade, and that's what we're trying to take advantage of. That's why I want to make sure I keep an eye on comments in case anybody, no, he's not in Canada, I'm in Tennessee, but it trades on E-Trade. All right, dope. So you can trade it on E-Trade. I can't get it on Webull. I could probably get it on Fidelity, actually. I've traded a couple other F stocks on Fidelity, so I could probably get it there. Let me know why you're looking at it. I'm curious if there was a piece of news or information that caught your eye. But again, okay, so we're seeing oil pull back and pretty significant, getting to bottoms where if they break through this, I really don't think we'll see quite the oil surge that we would expect to see to pull back this market rally that we might have for the next couple weeks, right? Like a lot of this has to do with energy. If it surges highly, that could be a big rain on our parade. So I want to watch it. And right now it's going in the direction of go have some fun and day trade this baby. But I want to see if this has to do anything with Saudi Arabia. And I've got this news report right here. So let's take a look from yesterday.
But I can't help but ask, really, for how long, given the pressure on prices right now?
Well, good question. We could well be at the peak, but high oil prices have been very good for Saudi Arabia's state-controlled oil company. Its second quarter profit blows away all prior records. As mentioned, $48.4 billion dwarfs the profit of any listed company in the world. The company said free cash flow rose by 53% from a year ago, and it's using the windfall to reduce debt as well as invest in a huge expansion of its production capacity. Now, in terms of outlook, it is betting that demand for its oil and chemicals is going to remain high, and that's even as the world is starting to look to transition away from fossil fuels. In fact, the company's CEO expects oil demand to continue to grow for the rest of the decade, and that's despite the downward economic pressures on short-term global forecasts. Now, we're seeing this kind of boom from other energy companies as well. Exxon and Shell recently posted record second quarter earnings. That Russian invasion of Ukraine roiled the market, as we all know, sending oil prices above $100 a barrel and causing refining margins to soar. But as Sherry just said, there's a view that this could well be the peak of these major profits for the big oil.
Oil prices have been easing, though.
Yeah, they have. We are seeing in Asia trading West Texas Intermediate down a bit. It fell more than 2% on Friday, but did manage to post gains for the week. So we're seeing West Texas Intermediate and Brent crude as well, sort of whipsawed between this combination of bullish and bearish headlines that have been hitting the market. Traders weighing the prospects of higher demand this winter.
There's not a lot of insight coming in from that particular. So I'm gonna see if anyone else is talking about this today. All right, well, we'll get the CNBC narrative, at least. You always have to follow the mainstream narrative, whether you like it or not. If you guys like other type of music, just let me know. Let everything catch up on here. For me, I like all music. There isn't any kind of music I don't like except bad music.
First of all, is that your read on what we're seeing in oil prices this morning, that it's mostly about China?
I mean, I think this is a big story that's been weighing on markets for a while. I mean, the big demand concern has been China. There had been some expectation over the summer that they would roll back these zero COVID policies and we could see an increase in demand out of China, and that just hasn't materialized. It's sort of been a failure to launch in terms of Chinese demand. But as Jim was saying in the previous segment, we have a lot of oil on this market. We have this U.S. SPR release, 1 million barrels a day that's hitting the market. That will unwind in October. And we have seen a real rebound in Russian production and exports, with those barrels going into key markets like India. The big question is, what happens if the EU moves forward with their embargo on Russian oil and 2.2 million barrels come December? Maybe facing a challenge getting a new home. But that's going to be a key inflection point in the market. Right now, Russia's having very few obstacles pushing their barrels out.
Halima, doesn't that move a little bit in opposition to the standard line that you've been hearing in the oil market for so long? Yes, prices are down, but really it's pretty tight supply. You're seeing the futures curve tell you that, right? That near-term prices have been higher. Therefore, it still is not a well-supplied market. So has that shifted, or is it just a short-term issue of absorbing some of the SPR and others?
I mean, the real issue was when this war started. Remember, we had this buyer strike where essentially we had, millions of barrels of Russian exports that people didn't want to touch. The Russians have been really successful, pushing those barrels into key markets. And again, the key question is going to be, outside of this Russia supply, outside of the SPR, if you look through the rest of the complex, I mean, OPEC is pretty much tapped out. Now, there were these comments from Ahmed Nasser saying Saudi Aramco is ready to produce more. That, to me, is not a news story. They've always been ready to produce more, to potentially go up to 12 million barrels if the Crown Prince and the oil minister ask them to do so. The question is the Crown Prince of Saudi Arabia, is the oil minister, are they going to ramp up production? They are really concerned about depleting spare capacity at this stage when we don't know what's going to happen with Russia sanctions. So to me, the fact that the Aramco CEO says they are in theory prepared to increase, that's not a news story. That's always been the state of play.
Hey, Halima, what a difference a couple of weeks make. We went from talking about how we didn't have enough oil, we weren't going to have enough oil, it was never happening, we're in a 5-year decline, big problems, to, oh my gosh, we're awash in oil. Is this a longer-term issue, or do we get back to the things we were talking about just a few weeks ago, where, okay, all of a sudden, if China's economy looks a little better, if things open up in different places, like, we're at a shortage of oil again? What's the overwhelming picture?
I mean, people are saying that this is potentially an artificial story when it comes to the SPR release. I mean, that does wind down in October. And so you're not going to have this additional million barrels being pushed out into the market from the United States. And again, to me, the Russia story is going to be fascinating because, again, come December, the EU...
All right, guys, sorry to interrupt your story right now, but we got some boom boom candles to talk about right now. If you take a look over on the top left, we've got our SPY, and she's touching her all-time high for the day. Excuse me, I apologize. We're at 427.36 was the all-time high. We're at 427.50, and we just broke through. Big old surge. All right, so I'm going to leave the charts up right here. You guys take a look. I'm going to search for any headline news that might be coming through. If you happen to see any headlines popping up, anything that sticks out, go ahead and drop them in the chat. A lot of times I do like to check Twitter here, but I think it'll screw up our stream. It's very possible that this has a little bit to do with the oil conversation that we were just discussing. JP Morgan says stock rally has legs. Morgan Stanley disagrees. Google Maps is misleading people searching for abortion clinics. Okay. Activist investor Dan Loeb takes new stake in Disney, urges ESPN spinoff. He wants Disney to drop ESPN. Goldman's Marcus raises high-yield savings rate to pre-pandemic levels. The secret behind a startup's almost free weight loss drugs. Saudi billionaire, anything. Nothing coming through the mainstream channels. All right. How are we doing over on that? I'm expecting that we probably got a pullback. Let's get this chart back up. Okay, so we did get a pullback. Interesting enough, after breaking the high of the day, and we did pull right back to this 427.40 / 427.36 range right there. So this is looking like it's going to consolidate here for a little while, and it's going to hang out and potty. All right, so we've got space on the bottom left. I actually am going to bring up Apple, bottom left. I'm going to bring up Microsoft. Oh, no. Today's a special day. We're going to bring up GME and AMC, bottom left and right, respectively. We talked about TGIF, and we can move off of that one. And I don't really need to see UVXY. Let's see how Tesla's doing. Tesla is $926.30. It's almost 3% up right now. NASDAQ is up 50 basis points in percentage. And the SPY is up 12 basis points in percentage. Apple had the biggest surge during that time. Let's see if no news became good news. Warren Buffett's Berkshire Hathaway keeps spending spigot on through volatile markets. Berkshire bought Apple, Chevron, and more in the second quarter. Filing should show. Apple reportedly plans to put ads in more apps on your iPhones. That's bullish for income. China's real estate market crash can affect these 10 American stocks. Apple will be one of them because so many people invest in it. iPhones might be about to get more ads. All right, same concept. So they're talking about more ads pumping into the phones, which could be more money, but less people are advertising. So I think that's going to be a wash on their bottom line in the end, I'll be honest. If they're pumping because of Warren Buffett's Q2 buys, then they're a little late to the game. Wow, look at that. All right, so I'm 2 hours in on the stream, and I need a little break. I think we finally figured out tunage for you guys, so I'm going to leave the charts on for you. I'm going to bring them down to something that you don't normally get and put them on the 15-second for you so you can see this price action. A much more zoomed in approach, and we'll put on some bass essentials. Now, if you guys ever have a genre of music you prefer, just let me know, man. I'm cool. All right, I'm gonna let that run. I'm gonna grab a bite to eat. Beautiful humans, take a safety meeting, walk the dog. Probably give me about 15 minutes. I'll be back on at, what is that? It's almost 10, it's 11, 12. We'll be on it. Oh, this is my lunch break. Call it 12:30 Eastern Standard Time. All right, beautiful humans. And thanks a lot, everybody, for the help with the audio. Oscar, good chilling with y'all. John Juan, all you other beautiful people for chiming in. I really appreciate it. A lot more to come. Yo, for real, don't even tell me that's Coda out there right now, for real. Hell yeah, hold up. No, wait. Coda. Come on, be real. What's up, beautiful people? Microphone check, mama microphone checker, mama microphone check, mama microphone checker, mama microphone check, mama microphone checker. All right, we're back. All right, we see AMC's pulling back a little bit. SPY's been leveling out, and it is at an all-day high. Let's keep an eye on the charts right now. We're going to zoom out. Right now, we're on the 15-second chart. We're going to boom out to the minute. And see, we got a little boom run. Look at that. 425.45 would be the bottom level. We hit that around 11:13 Eastern Standard Time, and now we are all the way up at 428.61 on the SPY. Running and rallying. I'm thinking 430. I mean, right now we're at probably our levels for the day. All right, we're coming in on 12:30. That gives us 30, right now 26 minutes until the reverse repo program begins, and that program completes at 1:30 Eastern Standard Time. And because of that, we often see lunch breaks have a big run in one direction or the other. And what they're waiting for, salivating, is for the liquidity to come in from the Big Daddy Powell gives them their bonus checks for the day. And they roll in on us. That's actually what I saw happen with AMC. I believe it was yesterday. If not, it was the day before. I was checking out the conversation on Trey's live stream regarding Lou and AMC and delaying the whole inevitable that is the ape share. And in case y'all just rolling in right now, wondering my opinion on it, like anybody who has at all been following the conversation. Oh, Coda, drop a line, brother. Drop a line. I don't see Coda coming in. Anyone who's been involved in the conversation over the past year and a half knows that the conversation about AMC and GME has always been about synthetic shares, naked shorts, and failure to deliver FTDs. And the only way we've always really conceptualized being able to police that, it was with an absolute market crash, which actually didn't turn out to be the right concept, because it turns out that the attack on AMC had much more to do with the fact that it was in a bull run than it was in a bear market. And we lost a lot of our control because the group got divided in many ways as of November. And then from there, a bear market took over and left a squeeze play like this a little bit more difficult. Now that we've seen a new bull run or bear market rally that's been significant come into the markets, we're seeing the chance for these algorithms that work off of bull markets to take over on AMC and GME and things like that. So if in fact these high frequency traders are able to cycle these shares and hide the failure to delivers, the only way you could really police it is by issuing a dividend or a separate offering like this. Because there's no way that the brokers that are issuing these synthetic shares will be able to replicate the ape stock tickers that are going to be available for them. So this is a do or die moment for the entire conversation about the meme stocks, which really is GME and AMC. And this is a do or die moment to see if our DD is correct. So if in fact it is correct, we're going to see some action, because today is the last day to cover. And then we saw some firing up, some firing down. You can see AMC is down on the bottom right, and it's down 2.8% on the day at $23.76 as of right now. It had hit highs at around the $24.20 range. Nice. And you can see GME right in the middle bottom here is taking a short ladder attack from the $40, knocked it all the way in a significantly short amount of time, all the way down to the $39.40 range, but that's not too high of a range. So remember, when we zoom out, we won't see this as a very significant move for any of these. Let's go back to the hour. Let's actually, the 1 hour chart's good enough. That gives us a range of about 10 trading days. All right. And let's look at the last time the SPY was at 428. We have to go back out to the day charts, and we're seeing at the day charts that was really, really significantly in the same range in May, June, July, August, 3 months, an entire quarter of a bear market and then a bear market rally for the SPY. And we are, what was I saying to you guys earlier? We're going to tap that 200-day moving average, which I said was right around 429, 428, right? And here we are. So you have to understand the resistance level that a 200-day moving average really is. If this breaks, so roughly if this breaks 429 and holds into tomorrow, at 429 or above, I think we're talking about a significant rally, and it might really bring the conversation where even I might be willing to say we're moving past a bear market rally. But history shows, and we reviewed earlier, that this type of thing can happen just before a major dip off. We're going to keep an eye on energy. We're going to keep an eye on commodities in the long run. But boy, we got to keep an eye on everything. So make sure you set your stop losses tight. Get ready for the fireworks, people. Look at this Apple run. I mean, are you guys? Look at Apple. I don't know. That sets off. Okay, so the question is, if we were going to carry on with this bull market, and this was to become a bull market away from a bear market rally, then where would the money come from? I mean, we're going to see where the money comes from in about, what is that? 50 minutes. We're going to see what the institutional hedge money wants to do with the reverse repo program money. Do they want to fire this up past the 200-day moving average? I could see why they would. I could see why they would want to. But I don't see how this is sustainable. I don't see how it's sustainable. I think we could have another week of this, but it would moderate after today. We could see 435 as a level. When you look at the volume profiles, you see that 435 could be that type of breaking point. So let's expect, based on this trajectory, that we would get to the 435 range around Wednesday, in 2 days from now. If in fact that was the case that would hold out, if that's a thesis that would hold true, I would expect that to be what we're going to do on Wednesday. Now, if it taps this 200-day moving average, which we have marked out, let me get this as good as I can currently. 429.22 on the SPY, 429.22. All right. If we can break that today or tomorrow, it'll be faster than that. My hunch is there's major resistance, and we'll be pulling back from there. We'll have to zoom in to understand our pullback. So I bring us back to the 1 minute chart, and we look at the day. All right, let's do 3 minute chart so we can see the whole day. Look at that. Look at that rally. This is the point in every trader's life where you have to develop your thesis and understand, okay, what is my bias? Is my bias this headed in another direction? If Coder's here, I know what he's betting on. Okay, so John Wan pipes in with Ape is worth 100 shares. If it gets converted, I would have millions of AMC either way. All for Ape. I haven't seen anything that one Ape is worth 100 shares of each. I haven't seen anything that points that. I've seen that it's a penny is its par value, but we're going to see that value get derived in the next few days. So I don't believe that's correct, homie. But we'll find out. There's going to have that information's not out there now. I think that's a presumptive aspect from the community. It is possible because this is such a unique event that something like that could be in the works, but I'm not expecting it. Now, don't tell me Coda's still in here. Hey, let's check out what cryptocurrency's doing, guys. Man, I hope that was Coda. a really good friend. I haven't talked to him for maybe January or February this year. I'd say that Bitcoin and Ethereum are swinging pretty well right now on their highs. I've been waiting for one last leg down in the cryptocurrency space before I really got super bullish on it. And the reason why you can get bullish on cryptocurrency is because it hits a bottom, and my bottom is roughly around 800 billion in market cap for the cryptocurrency as a whole. We're at 1.2 trillion right now. 800 billion is my bottom. The reason why that's a nice place with crypto as opposed to other types of things to sit in the bottom for a while is you can stake very well with very good returns once you're at the bottom with crypto, and just be constantly earning a dividend as you wait for a true bull market to come back into cryptocurrency, which I do expect we'll see in 2023. But there's a lot of events between now and then that are going to change the outcome completely. All right, so SPY is tip top tapping off that top, but I would call this the 429.32 top that we're seeing right now in the 200-day moving average, but with space for a liquidity sweep in one direction or the other. So we have 44 minutes left until the end of the reverse. Now, this isn't by the rule, right? Because the reverse repo starts at 1 p.m. Eastern Standard Time. It can be anywhere between 1 and 2 where you see the real effect of the swing, but you see a setup every day leading into that particular action in the afternoon, and then something happens, right? Whether it breaks, one direction or the other, they kind of determine that. I think they determine that based on which direction the derivatives are leaning. Because remember, stocks are just a derivative of the bond market, and options are just a derivative of the stock market. So the theta that is the stock price, and the even more theta that is the derivative option put and call price, is just a big act in order for people to just siphon off arbitrage trades based on high frequency trading of market makers selling premiums to retail investors who should know better. Tesla having a nice run up right now, hitting 936.8 on this little surge. They're up 4.07% on the day so far. We definitely have seen a nice surge of money coming in. Apple is consolidating at 173.13 right now, and it's more like, I'd say the range for this consolidation on Apple is a little bit more in the 170. Oh no, we'll call it that. We can call it that right there. That 173.27. Yeah, in 25 just to even it off. So $173.25 consolidation range for Apple right now. As it consolidates, so will the SPY and the Qs. Tesla being a fiery little upstart, doing its thing. AMC's roughly in a 30. Let me catch that. It's at a 38% retracement point from its morning down of 22.59 all the way to its high of 24.50, which we talked about earlier was a major resistance line. So I would expect AMC right now to find its bottom somewhere around the 23.50 range, consolidate there for another hour or so, maybe earlier, and start firing right back up. What we're really looking for it to do is break 24.50, and then we know we have some real action on for the afternoon. All right, so keep an eye on that. And keep an eye always, every single day, my people, like keep an eye on energy, keep an eye on the dollar DXY index, and be watching that as you trade. Set your stop losses tight. Do not ride trends in the wrong direction with your trades just because of your bias. Just get out, move on, make your next trade. Don't let your trades get sticky on you right now. You want to be very very clear about that. And besides that, beautiful people, I'm gonna hang out for another minute or two, see if any last minute comments come in. If you guys have any kind of TA you want to go over, let me know. And especially if Coda 999 is in here, dude, hollering at you, brother. All right. Hope you guys had a good time like I did today. Felt so good getting my first live stream rolling. Felt so nice, you guys giving up the comments, messaging everything in. I love it. I love it. Let's like keep it going and get a little community action together here. Start working on some stuff together. This is only the beginning. Nowhere but up to go from here, people. So, like I said, I'll leave this stream running. We'll bring it back to the charts. And actually, yeah, one more track. A little bit more charts on the 15 second. So you guys see some local action. Then we'll close off the stream for today. Perhaps I'll be able to come in this evening for a market wrap up. And then we're going to shoot for pre-market tomorrow. All right, beautiful humans. Thanks a lot for sticking with me. Keep on block rocking, show stopping, nobody clocking. And remember all the things I mentioned. And we'll be here every day. Readjusting is our advice and our assessments of levels as we need to. All right, man. All right, I got y'all. All right, hey Doc, what was the number for SPY you were looking at? That was 429.32. 429.32, and we'll zoom out right now to the day chart so you can see it. So what it is, it's the 200-day moving average. All right, you see it in there, top left. See that orange line right there? That's the 200-day moving average, right? Like, we get right in on it. You can see if I get to that closest level right now, 429.30. That's that level. And so they've got a little wiggle room right now to hit it and come on back however they'd like. I would expect the pullback to be coming now anytime within the next 40 to 45 minutes. And keep an eye on that local action. All right, that's question number one. All right, hey Doc, what was the number for SPY you're looking at? John Wan, how do you feel about ISDA Phase 6? Do you think it's going to be greatly Wow, okay, so they do Phase 3 now. A Phase 6 is something I'm not really aware of. I'm going to research that tonight. I'll get back to you on tomorrow or this evening's stream. I do want to know what the understanding of Phase 6 is in terms of whether or not it's one filter beyond approval or things, or if it's something that's allowed to skip Phase 3 and allow some of these COVID medications and other things and other experimentary vaccines to be let out onto the market before they've had significant long-term trials. If that's the case, I need to know about it before I speak about it. You know what I mean? Like Phase 6 to me could mean the opposite. Like it could be a skip through of Phase 3. So I want to know about it, and I'll get back to you, John Juan. And then the tracks are on fire too, man. Great beats. Yeah, that was from a Bass Essentials Epidemic soundtrack. So I'm glad you dug it, yo. I dug it too. It's pretty cool. Some of it gets a little off the chain, but whatever. We're all here to have fun with it, and we'll switch it up for different strokes for different folks too. All right, again, people. I'll leave the stream running for another minute. get up, do my business. I'll come back in a minute, just double check, see if there's any other questions that came in. And I answer those to my best of my ability. Like I said, John Juan, I need to know a little bit more before I get like even further into it. But it sends up a wild card for me. Hey, wild card central, what's up, doctor? Microphone check, mobile microphone checker. It's been a while, my man. Yeah, I'm glad to see you too, dude. Let me know if you're still doing your YouTube channel. If so, maybe we should do an interview sometime. I would love that. You can just let me know, brother. We're just ending the long stream right now, so I'm kind of like, and if you're just popping on now, what I mentioned as a big level for the SPY right now is the 429 with 30 bips at the end on the SPY, because that's the 200-day moving average, and we're just about to tap it, and we haven't tapped it since I believe it was May 5th of this year, so a whole quarter since we hit this particular level. So this is a make or break time, and we're going to be really examining what happens with this over the next 2 to 3 days, whereas if it breaks beyond the 200, I think we will max out at 435 as a level on Wednesday, and that's just a gut check hunch, and as opposed to too much TA involved with that has a little bit more to do with timing, and then we just got to see what the rest of the day does. The other thing I mentioned is that watch out for the reverse repo program money flooding the markets over the next 35 minutes. It begins in 5 minutes, and then it runs for 30 minutes, and then it ends at 1:30 Eastern Standard Time. And you always see major effects, especially with swing plays. Now, what we're seeing with AMC is it's got a nice little run up right here, coming back just a little bit. It's not too much of a range. Oh, I'm sorry, I'm on the day chart. So yeah, we've had a nice little, bull run on AMC in that period of time. But zooming back in, we popped off our bottom levels 2350, heading to 2375 now where we're at. And like I said, that level we want to break is 2450 to really know we have a breakthrough on AMC. And again, here on the SPY, you're going to be keeping an eye on, it's at 428.76, and I think it's purposely sticking at that level for a very good reason. Get ready for a liquidity sweep. One way or the other, get ready for a liquidity sweep. They love to wait this stuff out, let some theta decay set in on the options chain, and just ram you one way or the other. Whichever way is going to earn them the most profits. All right, so be ready for it, people. All right, and I'll be block rocking with you. All right, well, I'm going to check one last time, see if any other questions rolled in, and then I'm gonna bounce. All right, yeah, just because my voice is kicking, and I want to do the evening stream too. This is awesome, though. I'm having such a good time. This is super dope. I like chilling with you guys, and I like analyzing this stuff. Always, it's an open floor, man. We're here to talk about stocks. All right. That's it for me, people. UNITY, everybody sing. Keep on block rocking, show stopping. Hope nobody clocking. All right.